The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are having a fun and exciting and indeed profitable start to the old trading week. My name is Mark Longo, and I will be your host for this sexy soiree through the world of options. And I am joined by our rogues gallery of contributors, starting off with the man himself, none other than Big Rob K., Mr. Kurzakowski from Options Express. Mr. Kurzakowski, how are you doing this fine Monday afternoon?
I'm doing great. Love being here in the AC because it's starting to finally get a little smoldering out there in Chicago. So we do the annual jump from winter straight into summer.
Yeah, you got to love that 45 degrees on one day, 95 the next.
Yep. I'm like right below a vent, so my left contact is completely dried out at this point.
Rob K. enduring adversity for your benefit, listeners. So he is indeed a martyr for the cause. And that chuckling, tinny, somewhat echoey voice you're hearing today comes from none other than the Seabass, good old Mark Sebastian himself. He's echoey because he's coming to us live from the Board of Trade atrium today. Welcome to the show, yes, Mr. Seabass.
Oh, it's a great day. It's me, 2 cows, and a 20-foot topless painting of Ceres. And you guys. Who could ask for more?
Why don't you burst out in some nice stream of cursing, and then we'll continue with the show, just to draw some nice attention to yourself there in the Seabot atrium.
Well, anybody that's been to the atrium, it probably is not that many people, but there is. Ceres is the statue on the top of the Board of Trade. And in the atrium, they have a massive, massive painting of Ceres walking around in a cornfield. And Ceres famously never wore a top. And, of course, the Board of Trade run by men decided to keep that tradition alive and well.
Classy as usual over at the Seabot.
What they're known well. Have you seen those guys with their ties? They look real classy.
Because when I think classy, I think Ceres and her accompanying cafe just define class to me.
Oh, yeah. Well, stiffest drink in the city.
Used to be, anyway. And
it still is. But no. It is.
Okay, I'll take your word for that. And then joining us, of course, last but not least, beaming in from the mountains, none other than good old Mike Tusaw from Know Your Options, Inc. Uncle Mike, how are you doing this fine Monday afternoon?
Doing well. We are broadcasting live from the new headquarters of Know Your Options over at 216 Jefferson, and this is the debut broadcast of the show from this location, so we're excited over here.
We're moving on up.
I thought you sounded a little different.
Moving on up.
Did you
more on the west loop than the east?
Office in the south, in the west loop.
Did you build a nice soundproof studio just for Option Block recording in your office?
I don't really need that because when I first broke into the business, when I was with Options Express, the first live webinar I ever did, David Kalt, one of the founders of Options Express, literally put his arms on my cubicle and said, "I'm going to watch you and make sure you screw up." And he just stared me down the whole time, and it was like his test. And so thankfully I made it past that. So ever since then, I can deal with screaming kids. I can deal with pretty much anything in the background. It really doesn't faze me anymore. The wrath of Kalt kind of helps me to get better.
Congrats on the new offices. You do sound deep and rich and lustrous, even more so than normal. So I think the new offices are agreeing with you, sir.
Oh, thank you, sir.
All right. And with the team assembled, we will roll right into the trading block.
The trading block.
And welcome to the Trading Block. This is the section of the show where we discuss, surprise, surprise, what is trading today. And it is another mild down day on the old street. We see the S&P down about 14 handles, NASDAQ down about 30, Dow down about 61, and the good old VIX cash finally taking a turn to the upside, closing at 1849, up 0.54 points or 3%.
I mean, that's not even really up. Right? I mean, we're coming off a weekend. It should be up about 0.7.
Well, we're coming off a weekend. The S&P's down about, 30-odd handles since a couple of days ago? So.
Yeah, I mean, coming off a weekend, S&P's down 14, and the VIX up 0.5 point tells me that fall's actually probably in today. Nah. So, it kind of blows my mind what they're doing down there. It's unbelievable.
Yeah, I mean, this goes to what we always say about the VIX is you have to see it in context. And, the VIX at these levels, considering the S&P is off about 30 handles over the past few sessions, it was, 1312 a couple of sessions ago. Now it's 1286, so down about 26 handles.
That's exactly right.
When you see it in that context, vol should indeed be increasing, and yet we had a weekend to come out that should come back, some of it at least on Monday, and we have not seen the commensurate pop in vol that we should be seeing given all the movement. If we do adjust to the fact that we are 30 handles lower, then the vol overall is probably down.
Oh, yeah, no, it's definitely down. And, I've just been, I was telling you earlier, I've been shocked at the brazen premium selling that people feel comfortable doing into this down market. And, we've broken through the 1300s, and we're getting near those 1275s. At one of these points, these people are going to have to start coming back and buying the puts. Yeah, I mean, my point is that we've seen us below the 1300. We're starting to threaten 1275. There's a ton of short premium on those two strikes specifically. At some point, this thing is going to, if this thing continues this way, they're going to have to come back and buy this stuff. I'm expecting a day where we're down 12, 15 points, and we see the VIX up 2.5, because there at some point, and then at some point we're going to have to see some people buying this junk back, because this is brazen, as I said, just the ballsy premium selling.
That might be a good secondary index or measure for the VIX, is the contextual VIX. That number could take into account where the VIX should be on that point in the skew curve and all the other activity that puts the VIX cash itself in context. The futures activity, the time decay, the weekends, all these different things that impact the VIX cash. And like we say, VIX is useless without context. So maybe we can create a contextual VIX number that actually might be more useful to people, and then we can say, hey, today the actual contextual VIX is this, and it would be maybe a little bit more relevant for people.
Well, I've been talking about for some time that the CBOE is going to have to start recalculating the VIX here sometime soon with all the new things. They're going to have to update that thing. It's been about 8 years. VIX is going to have to be updated my guess is about every 5 years from going forward, just with all the changes in the industry.
When even the Financial Times is running, front page pieces a few weeks ago about how the VIX settlement is off and the prices are off, and even they're picking up on this stuff, then it's time to recalculate and resettle. And of course, Mr. Tusaw, you were talking about your 1300 level in the S&P last show. Well, we've since broken through that. We're at 1286 right now. What's your feel going forward for this market, Mr. T?
Well, a couple feels on it, but before, I guess that didn't come out too well, but a couple of thoughts on it. But first off, I just kind of want to expand a little bit on what Mark was saying. Right now, as part of a bigger hedge, I mean, this is just one chunk of a bigger type of hedge that we have going for a couple of market-based hedges that we have going in our accounts for our clients. We're long the DEES 120 calls in SPY. I'm sorry, the DEES 134 puts in SPY, and we are short the June 127 puts. Just a traditional diagonal put spread. And what we're seeing, what should have happened today, or at least in these last couple days, that June 127 put should have come up a lot more than it did. And because we got into this thing probably about 5-6 points ago, and right now we got in the 127 put for June, we got into it at 72 cents, and right now it's trading at $1.04. And so we really should have had a lot more movement on this. But I agree with Mark. There is definitely a lot of very complacent premium selling. And because of this right now, we are actually, and this was not part of the original plan, but just kind of one of the plans to where if the market.
Hedge, right?
What's that?
You're probably really profitable on the hedge, right?
Oh yeah, this is working out. This section of it's working out great. But I mean, like what we're looking at right now, it wasn't in the original plan to get out of this 127 put right now. But this is an example of what Mark brought up a couple of weeks ago. A hedge isn't a hedge unless you do something with it. Right now, because of this action, we have to look to see if it makes sense to even stay in this 127 put because of the fact that it's a pretty good deal right now, where it is. So. Just wanted to expand on that a little bit.
I mean, you could buy it in and roll out to July, the July 122s, and probably, the July 124s. And this is one of the nice things about having a guy like me or a know your option, with your team strategy.
Yeah, and this is one where we have a whole slew of things that we're going to be looking at right now, and this is one of the ones to where. The BBI might go up a little bit or go down a little bit, whatever way you want to look at it. But this is if you're in a diagonal put spread right now, whether it's for a hedge, whether it's for a speculative play because you've been bearish, if you're in a diagonal put spread, now is the time to where you should be in a pretty good position. If you have this relationship right now, and now might be a time to really take a close look and see if it makes sense to hang on to the short puts at this stage of it. So I just wanted to expand a little bit on what Mark was saying. But in terms of the 1300 level, yeah, we closed right at 1,300 and a fraction on Friday. And so going into the weekend, I was thinking maybe we'd hold it. But before the market opened this morning, it wasn't even looking anything close to holding it. So we adjusted for a down day with that today. And there could be a lot more downside to this market. I could definitely see that. Not seeing support for a while yet. And I'd be very cautious right now.
Yes, despite everything we've been saying for months now about this. Too bad Grigas isn't on to talk about his shorting of the market on a regular basis. But we've been talking about this potential for downside for a while, and yet the market continues to ignore us in terms of downside premium in these S&P puts and elsewhere. But of course, speaking of the BBI that you referred to earlier, Uncle Mike, let's talk about some commodities since they tend to impact your BBI quite a bit. So Uncle Mike and Rob, take it away. What are you looking at in our commodity rundown for this episode?
Well, we had a pretty tumultuous OPEC meeting. This is the most argumentative the OPEC nations have been with each other since the Iraq invasion of Kuwait. Countries are pretty divided as far as not so much as far as what they plan on putting out there as far as output, because they're leaving it unchanged. But the dissension over Libya, some countries are supporting the Gaddafi, and some countries are supporting the insurgents. So normally OPEC is a pretty pretty much everybody moves in step, and we're seeing a little bit of dissension now. So as far as what that means, that's kind of unknown at this point. Saudi Arabia is kind of seeing the writing on the wall, and they're seeing all this dissension in other countries, so they're agreeing to to pump out keep on pumping oil, and actually the Saudis are expected to increase their Saudi Arabia is expected to increase their oil output, and that's not really that big of a surprise, given that internally they may not be the most popular regime, but they want to make sure they stay on the West's good side. But despite all that news, I was expecting oil to make a little bit more of a move or be a little bit more choppy today, and we opened up 90 cents lower. We sat 90 cents lower for most of the session. With the restructuring of Greece's debt and some pretty harsh statements about the Spanish economy possibly being bankrupt. As expected, we saw gold buying go up a little bit. It was a little bit more subdued given the weakness in other commodities. And speaking of weakness, grains got crushed again. Now that the Midwest is starting to dry up, we're not having the planning delays, and we're kind of within that safe planning window. Grains are pretty bearish. We've already seen, the spreads. The market is in backwardation with the back months trading underneath the front months, with the expectations that supplies are going to ease. Russia is actually exporting wheat for a change. Last year, because of the wildfires and the drought, they stopped exporting. So just a lot of bearish factors affecting grain. If we didn't have this sell-off we had in the grains and kind of this weakness in oil, we could have easily seen a $25 to $30 up in gold because of the overall economic weakness, and we obviously didn't see that today.
It's funny you should mention the grains. I just had a long conversation with someone yesterday about this topic. It seems I'm hearing more and more anecdotally from the options market making side that more and more traders and trading firms are abandoning the old equities where they're getting squeezed to death on spreads or getting squeezed to death on payment for order flow, and they're migrating into the grains and the corn and wheat and all these other things because there's still vol there. The spreads are relatively manageable, and there's activity out there for the most part. So it's interesting to see how many dyed-in-the-wool equity option guys I'm seeing migrating into ags and other commodities for the first time, just as a way to try to find some sort of safe harbor where there still is liquidity and trading and volatility and some edge.
Actually, when I first got into the futures business and started talking to guys that traded options on the floor, the grain traders were always the vol-minded traders. It seemed like the guys in the big S&P, they were looking for dimes. That they just looked to live off of that spread. You really didn't see people take positions. With the grain traders, those guys were always, when you talk to them and try to, taking the trade in with some grain traders, I talked to them, about market, and they're long vol, they're short vol, and that's all they really care to talk about. They didn't really care to talk about the general direction of the market. So. Yeah, I mean, it gives you the grains now being far more liquid than they used to be, trading electronically. We see a lot more traders trading the grains, and a lot of our premium writers in the futures, in the future side, have actually moved into grains. They've gotten out of the energies and moved into the grains just because it's just too crazy in the energies. When you have that 3 deviation move, it just wipes you out. You have enough movement, but it's manageable and it's easy to hedge. Where in oil, it's kind of you get into a bad position, and those guys on the screen, those guys on the floor, it's like sharks circling you. They smell that blood, and it makes it really difficult to hedge. Where there's still a little bit of anonymity. There's enough big players in grains to where you can build up a position and remain relatively anonymous.
And listeners, we didn't mention at the top of the show, but that is indeed why Mark Sebastian is over at the CBOT today. He is giving up the mentoring business and going to become a local in the wheat pit.
Corn.
Oh, corn. I'm sorry. I misspoke. I didn't mean to slander you by saying wheat, but we can't.
Thank you.
We can't close out.
I only trade things grown in Illinois. That's my rule.
There we go. And we can't close out the old trading block without at least mentioning Uncle Mike's other favorite stock next to Ford and Cisco, of course. Apple, they had their big announcement today. Of course, we have Rob on the show, another tech follower, so we can discuss this a little bit. I didn't have a chance to watch their event. I know, Uncle Mike, you did. They announced their big cloud initiative, and the market responds with a resounding shrug and knocks the stock nearly $6. So I guess it wasn't the bang-up event they were looking for. Uncle Mike, did you watch this today? What was your reaction?
Yeah, I saw part of it. I saw right when Steve Jobs took the stage, he got a standing ovation. I think that a lot of what was a lot of this was actually factored into it. You look, we had a run-up going into this announcement, and right here, if you look at the movement of it today and the downward movement of it, it actually just kind of filled the gap on the chart as it went down. I think the big news, just as an Apple person, is that Steve Jobs is alive. I mean, he looked a little bit thin, and I don't know if I would necessarily want to recruit him right now to play offensive line on any football team that I coached, but he does appear to be he still appears to be like he's able to do things, and I think that's something that that's the good news of what today's announcement was. In terms of the cloud itself, it seems like everybody has a cloud. There's a cloud. Amazon has a cloud. There's clouds all over the place, except in the Illinois weather lately. This last week, it's been very beautiful. But the announcement itself, I don't think was really all that. I think it was pretty much factored in.
I think the Capitals will Johnny completely to this game, aren't they? And Amazon had such a massive hold on this business. I mean, other than specifically Mac users. One, who's going to, unless you're one of these Mac is going to take over the world, which they're not, people, I don't see how you think Apple makes any sense. I think they're much better sticking to kind of their app and their little tinker toys that they produce as sort of big cloud thing. Yeah. You're just never going to be able to manage that.
Yeah, Amazon
this
seems
is the first step in them over too much. It's going to take their eye off the ball.
Amazon seems to have really stolen everyone's thunder with their announcement a month or two ago about their streaming service, and everyone, Google and now Apple, seems to be playing catch-up.
It seems that just kind of going through the tech blogs and just reading what was said by a lot of these people that have kind of sway over the tech heads, if you will, but it seems like the people that were really excited about the announcement were the pro single platform integration people that, Apple's going to have control of all this cloud stuff. And the people that are kind of anti-Apple, your Android people, they were like, they have. It's kind of like the iTunes debate, the pro and con of Apple kind of controlling everything. Some people view it as a good thing, an anti-fragmentation thing, and other people really don't like, the fact that you're basically you may be limited to basically Apple's iCloud.
Yeah, I think that it's just one to where there's going to be some market there, but it's not going to necessarily be. They're not going to be the kings of it. No, I don't really think they will be, but I think it's good for them that they have it. It's kind of like Options Express, for example. At Options Express, they're not known for their mutual fund platform. However, if you do want to trade a mutual fund, you can hold a mutual fund, you can do it at Options Express, and that's something that's a convenience for a lot of their clients. Now, I don't know if the contrast is necessarily quite that extreme, but the point is, I think it's something to where I don't see them being too overextended on doing that. But on the flip side, I don't think that's not going to be the next step towards ruling the world, and the investors don't think that either, based upon at least today's trading.
Yeah, not exactly a resounding applause from the market for this announcement. I think you're right, Uncle Mike. A lot of this has been discounted since they took the unusual step releasing a press release before this announcement, which Apple never does, touting what they're going to be talking about. So I think the market had digested much of this, and this is just what you expected movement after this kind of announcement. But that's going to do it for the old trading block, and we're going to roll right now into the odd block.
The odd block.
And welcome to the Odd Block. This is the section of the show where we discuss the interesting and or the unusual options activity that is lighting up the tape today. And we're going to kick things off with another of Uncle Mike's favorite names, Ford. They closed today at $13.91, down a dime. And these guys, they usually do about 150,000 contracts a day in Ford. They did 278,000 today. And 131,000 of that volume was one guy. And it's an interesting trade. So this trader comes in and he sold 35,000 of the Jan 12 halves. These are about 12% out of the money calls on splits, obviously, because he did it for a price of 2.185. He used those proceeds to buy an assortment of upside calls smattered across the expiration months. He bought 7,500 of the Jan 15s for 91 cents. He bought 17,500 of the Jan 16s for 62 cents. He bought 35,000 of the AUG 15s for 35 cents. And he bought 10,000 of the Dees 15s for 82 cents. And since the open interest is so high in a lot of these strikes, he could be rolling or closing part of it. But it seems like this is predominantly an opening transaction, and he's putting on essentially a very long diagonal stupid to the upside. They short a lot of size at the money Jan 12 halves and long a ton of upside across the board. Admit it, Uncle Mike, this was you, wasn't it?
I'm not at liberty to discuss trades with which I am in, so, this is nuts, yeah.
This guy's putting a little bit on each of the numbers in the old roulette wheel and then rolling the old dice, but,
either he has some type of algorithm where he is seeing the exact vol and has some type of a lot of things just lined up for him today, or it sounds like this is one where he's the new guy at a firm with some very deep pockets and says, I want to see some type of action in Ford, and he's just said, all right, here we go.
Yeah, I wonder, I didn't add up the premium on this, but I wonder if this is the way that it works out to be premium neutral on this ratio, or if this is him, his algo or his models telling him
maybe it's flop against something stupid like, you never know.
Yeah.
Right?
But it's always fun to see these crazy ones. So, 131,000 contracts going up in one size trade out there in Ford.
And, you can never tell what these guys have in mind, but I was just making a joke that, they probably solicited this thing away. But there's probably, you'd be surprised how little edge there probably is in a trade like this, even for how big it was. Because, markets have gotten so tight.
Oh, yeah, I'm sure there wasn't much edge at all. This guy's obviously needs some movement for this baby to work out for him. Tight markets these days. And then next up on the old docket, we have Focus Media Holding Limited, ticker symbol FMCN, and they closed at $28.64, down about $1.85 today. And this is the largest multi-platform digital media company in China, seeing size bearish order flow today. This is the name that does about 5,500 contracts a day. They did nearly 24,000 today. The bulk of it looks like it's coming in on the July 25 puts. More than 8,000 went up just in the first hour of the day, being picked up for 41 cents. And looks like the total on the day was about 8,800 on that strike. So, a bunch of opening bearish paper coming into this FMCN name. Not surprisingly, we saw the vol spiking across the board because of it. We also saw a couple thousand of the June 31 puts and June 30 puts going up as well today. So
this is actually a big competitor, or actually the dominant market player in the same field as CCME, which of course was halted months ago, stayed halted for 3 months, and is now trading on the pink sheet. So I don't know if there's a Muddy Waters report coming out soon or what, but it seems that
that blue stinger sure knows how to dig into Chinese corporations. Have you noticed that?
I have never seen anybody with that much access to. I mean, he's talking about.
Well, it's his sweet guitar that gets those Chinese to open their mouth.
And I mean, he hires lawyers to go to these local tax offices and see what they're actually reporting to the tax authorities, because they all pay regional taxes instead of like central, like IRS, like a central governing body. So then he gets some, I don't know if he bribes these people or what to give up the records, but because they're not exactly public knowledge, and he digs up an amazing amount of dirt. On these companies. So, I don't know if there's a report coming out soon, or if people assume that China CCME was grossly overstating their revenues and their profits. That maybe FMCN is kind of doing the same thing, but. I don't think it's a coincidence that these two, or that this is the market leader in that industry, and is people are taking kind of just buying a huge bearish position, hoping that the stock plummet.
There you go, Rob, illuminating us on FMCN. It's more downside potentially ahead for this one. If it does follow suit, then we could be seeing some nice downside movement in this one, in this trade.
That's why they always say, if it's Kurzakowski, it's knowledgeable. That was I don't know if you knew that.
That was the original OX slogan before.
That's exactly right. You know how the Kurzakowski said, how in Happy Gilmore, or not Happy Gilmore, in Bill Medicine, it's Bill Rules of Bills. Yeah, it's that was the Kurzakowski clan motto. If it's Kurzakowski, it's knowledgeable. I don't know if you knew that.
The clan, the Kurzakowski clan. I have this image in my head of a bunch of, for some reason, Japanese samurai warlords and their clan all battling for knowledge.
That would be funny.
That would be interesting. All right, and then we're moving on to Micron Technology, closed at $9.04, down 12 cents. They do about 53,000 contracts a day. They did 62,000 today, and we saw a lot of interesting opening bullish activity in Micron today as well, predominantly on the June and July 10 strikes. We saw over 8,000 of these, each of these being purchased in a clip, with about total of about 13,000 of the June 10s going up today, and about 13,000 of the July 10s going up today as well. The call to put ratio on MU today was about 10-1, so heavily into these opening strike. There's heavy open interest on these strikes, so there could be some closing here, but it looks like predominantly this is opening paper on both of these strikes. Let's see, I don't have prices here, but these are the Junes were probably in the 8-cent range, and the Julys are probably in like the 25 to 28 cent range. So a lot of opening upside or near upside buying in Micron. They have earnings on the 28th, so this could be an earnings play as well, at least in the July contracts. Finally, we're going to finish it up with Disca, Discovery Communications. These are the guys who make all of Tusaw's favorite shows and channels, TLC, Animal Planet, all that fun stuff. And they do about 300 contracts a day, so they're huge. They did 2,000 today, which is a big move for them. The bulk of this, pretty much all of it, was on the July 40 strike. We saw 1,800 puts getting picked up for about 50 cents. So these are people pretty much leaning into this name, saying that over almost 2,000 on the day, thinking that there's a lot of downside to come in Discovery Communications. Not too much to read on the tea leaves on this one. They've had some downturns lately in this name, and they're thinking that this one's going to continue to go down. So yeah, out of the blue, a pretty sizable opening trade here. Open interest on the strike is 400 contracts. So people thinking there's room to move to the downside in Discovery Communications. And we can do a quick hit really quick. GenPro getting crushed. Ticker symbol GPRU, and it looks like the last remaining bidder for that company is Novartis, and that's hurting the stock. We saw a ton of trading going up today in GPRO, including a big block 6,100 contract block of the AUG 85 calls going up for 65 cents, which was a sale, was liquidating. This name is closed at $71.41, down $10.35 or 12, almost 13%. And just a ton of bearish paper going up here. We saw a bearish risk reversal going up on the July 65 risk reversal going up 2,000 times. Looks like 4,000 on the tape, but 2,000 of that was canceled. So 2,000 times buying the 60 puts for 95 cents, selling the 65 calls for $8.55. Looks like he kind of jumped the gun a little bit on that one because the vol has since come off quite a bit on those strikes. So he probably bought the high point of the skew down there. The July 90 calls also were sold 2,000 times for a range between 40 and 60 cents. And the AUG 65, almost 9,000 trade for a total of 65 cents. So a lot of bearish paper going up in Gen Pro today. All right, and that's going to do it for the odd block. And now we'll roll right into the express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the part of the show where Rob Kurzakowski runs wild, and Mark and Mike and I try desperately to restrain him, usually to no avail. So, Mr. Kurzakowski, what are you going to run wild about today, sir?
Oh, we have a lot of exciting news at OX right now. We're starting to roll out Forex to more and more accounts. If you go under the trade heading and to go to Forex or Trade Forex, that'll take you to the application. Those of you that are already futures approved, very similar guidelines. It is a fairly painless process, and we're really excited to be bringing this forward out for our customers. I was a holdover from Express Trade, and we offered Forex trading, and that was one of the big disappointments is the phasing out of Forex trading for our old Express Trade customers. And now that we're kind of heading into the summer doldrums, and it is a nice alternative investment because you may not have an opinion on the stock market, but you may have an opinion on the U.S. economy and how it's going to fare relative to the growth economy like Canada or a similar economy as far as a older, more established economy, kind of a slower growth economy like a EU, or how's the dollar going to fare versus the Australian dollar. So you may. Just like futures gives you the ability to trade on a macro level as opposed to trying to pick individual stocks, Forex trading does afford you the same opportunity. You can trade a lot of different. It gives you a lot of flexibility. If you want to, you may not necessarily want to pick a market direction. You may be neutral, but it gives you the opportunity to put on a carry trade, a higher yielding currency versus a lower yielding currency, and just collect the interest payments. So it is very exciting, and it does give us another product to offer to our clients. And also, speaking of summer doldrums, slow trading does give you the opportunity to do some reading, revamp some of your trading strategies. I think that sometimes traders get spoiled by their own success, and we've seen that recently or over the last couple of years with put sellers. Every time the market makes a dip, that's the reason why we're not seeing the VIX get crushed or VIX spike and the market get crushed. Is you have this kind of backbone of support. You have these put sellers. Credit spread strategies, and those are really not successful strategies when volatility does finally move out. I mean, the VIX has kind of had a ceiling here at 20. It's like the 20 is the new 35 every time the market approaches that level. It seems to come back, but it's not going to stay that way forever. So it does give you the opportunity to revamp your trading strategy, especially if you're a more advanced trader, a more seasoned trader. Sometimes we get into habits, and this gives you an opportunity to crack open the old textbook and kind of remember some of those old strategies, the back spreads, which can be it can work to your advantage when volatility spikes. Reverse calendar spreads, instead of trying to be non-directional and putting on those credit spreads, it may actually be a time to be putting on debit spreads and letting the vols work for you. Sometimes not having an opinion or being out of the market for a week or two gives you it kind of gets you energized, gets you refreshed. That gives you the opportunity to jump back in with a new trading strategy that it's a nice break from what you've been doing, and it also gives you the opportunity to be profitable.
I think you're speaking heresy to a lot of our hardcore listeners who are degenerate premium sellers, sir. They will not buy vol no matter how much you entreat them. But yeah, even though we've discussed on recent shows how low vol has been, and obviously the downside, premium is still relatively inexpensive compared to where it perhaps should be in context of everything else that's going on in the broad market.
And even if you are a premium seller, this is a great time to buy cheap insurance. Hedge your gammas. Just go out there and buy some way worth, if you're a put seller, buy a whole lot of worthless put options, because if the market does make that huge break, at least you're protected and you're not out there scrambling to keep yourself solvent.
Exactly. And on the tech front, you weren't on the last show where we had a nice listener question, or an interesting listener question, about the potential to stream the show, actually the option block through the mobile app. And so I put that on the shoulders of good old Tim Navabi, who's on the last show, to get that done. But hopefully he passed that word along to you. I know you're on the product tech team over there. I think it's a very interesting idea, and one I've been banding about a lot with your biz dev guys over the past 6 months. And I think it'd be an interesting way for people to be able to get access to the show through the old OX mobile app. What do you say?
And that's actually something that we've that's actually already been passed on to our business development team. We're trying to push them because this is this is what the mobile app is all about. It's not sitting down and reading the Hightower report, because even though you can view PDFs on your phone or your tablet, it may not always be the most convenient way to get your news.
Yeah.
And this is podcasts and audio recordings are the it's nice to just sit back and sometimes listen, especially those of us that are glued to screens all day long. It's a nice break for the eyes and be able to listen to the show in a much more convenient way of listening to the show, instead of having to go to the iTunes store and download it and then listen to it that way.
Exactly. Our thoughts exactly, sir. All right, and that's going to do it for the OX block. Very informative as usual, Mr. K. And now we're going to roll right into the old strategy block.
The strategy block.
Welcome to the strategy block. This is the section of the show where Uncle Mike Tusaw goes on the rampage regarding one interesting options strategy or technique or trading tip. Uncle Mike, a little birdie told me that you may be discussing today credit spreads versus leverage naked options. Is that indeed correct, sir? Is the rumor mill correct?
Man, you got your ear on the street like no one else I've ever met in my life.
You know, we're at the nexus here of all the options scuttlebutt. And I heard a few days ago that Uncle Mike was planning something around this level, but I didn't believe it. It seemed too crazy even for you.
Oh, it's crazy. But anyway, today's strategy block, what I want to go over is the temptation of selling naked options. Now, if you're going to sell naked options, I have no moral objection to it, but you better know what you're doing. I can remember just talking with people when futures options first came on to Options Express. And I think we were even talking about, I think Rob can probably even attest to this too, and a lot of the Options Express employees and a lot of the customers were looking at the actual margin requirements for selling far out of the money calls or puts naked on the S&P Mini. They were actually not very high. And that was back in the golden age of the Condor. Back when if the Condor was just an annuity and everybody made money and we all lived happily ever after. Oh wait, I was wrong on that part. 2008 came around and that didn't really happen. But my point is that oftentimes a new trader might be tempted to sell a naked option far out of the money on a futures contract. Or if they have more money, they may be able to do it on perhaps the SPX or RUT using portfolio margin. Well, there's a price that you pay when doing such things. Oftentimes, people will confuse high probability for low risk. There's a totally different thing. It's a totally different thing, folks. If you sell an option far out of the money, it's a pretty high probability that you're going to make money on the trade. However, it is a very high risk that actually goes along with it when you actually do such a trade. So with that in mind, what's the advantage of a naked option versus a credit spread and vice versa? Well, if you're really concerned about the black swan event, you're definitely better off doing a credit spread, just because of the fact that you can live to trade another day. There's an old saying that credit spreads, you can lose all your money, but naked options, you can lose your house. So with that, you kind of have to walk the fine line of when it's right to do either one of them. Typically, I would prefer a credit spread over a naked option, just because of the fact that I want to be in this business for many years to come, and you can build up your capital for years and years and years selling naked options, but it only takes one crazy day for you to be knocked flat. So with that in mind, what I would encourage everybody to do, if you are being tempted to get naked, make sure that you have a plan. And don't make the plan something along the lines of, well, if I get a margin call, that's when I'm going to get out of the trade. You need to have a plan to get out of it much sooner than that. For example, let's say that you're trading a naked option and the delta on it is perhaps 6 or 7 or something, or -6 or -7, depending on if you're doing a call or a put. Perhaps when the delta gets up to maybe the 15 level, that's when you get out of it. It's a lot easier to get out of a naked option when it's still far out of the money as opposed to when you're 6 points in the money. Same would hold true for a credit spread. I think that you should have an exit point a lot sooner than when it actually hits the short strike price or when it becomes too late, but I think it's much more so of an important thing when doing so on a naked option. So, moral to the story, if you're looking at futures options and you're considering trading them naked, be careful, because bad stuff can happen to good people in this world. Trading is one of the few professions that can make a sinner pray and a preacher swear. If you're trading a credit spread, understand that you do still have risk on the table, and just because you have the reinsurance policy, if you will, with the long leg of the credit spread, you still need to be prepared as to what are you going to do should it start to go against you. And that is Two Saws 2 cents on Two Saws 2 strategies for today. Back to you, Mark.
Thank you, Uncle Mike. And of course, you mentioned the futures options. But of course, there is another issue with selling naked options and even credit spreads to a degree that a lot of traders who dive into these strategies, I jokingly call them degenerate premium sellers, don't consider is, of course, the margin requirements on these trades. If you're going to start blasting a lot of out-of-the-money options, even if they're teeny, unless they're really, really far out, you're going to have a lot of opportunity cost to that trade because people don't consider how much capital they actually have to keep in reserve to cover those trades. And so the credit spread option does indeed help you on the margin and opportunity cost side as well, because you don't obviously have to reserve as much capital on those trades because they are of a limited risk variety as opposed to the naked options. I've lost track of how many times we've been contacted by newer options traders who come to me saying, why are my margin requirements for this? Why can't I do this trade? I'll look at some of their examples they'll send me from their account, and sure enough, it'll be because they have loads of short put positions on or short option positions on that is eating up all of their capital and margin requirements, and so they can't put on other trades they might want to make. So be sure to keep that in mind, too, when you're thinking about premium selling, not just the overall risk, but there is indeed an opportunity cost to putting these trades on. And you will have to tie up capital to do them, and perhaps they may not be the optimal way to proceed in this environment. Well, thank you for that, Uncle Mike. And now we're going to close out the old strategy block and roll right into Around the Block.
Around the Block.
And welcome to the Around the Block section. This is the part of the show where we discuss what's coming up on the horizon for the next few sessions. And starting off with you, Mr. Seabass, what's on your horizon for the next few sessions here?
I think that we've got a nice little pullback coming. I keep expecting a big skew shift here sometime in the next couple of days. So, right now we're being afforded the ability to buy puts in June and July at a very, very, very cheap level. And I think if you have a long position and you're not hedging yourself, you're a fool. And if you're a trader, you should be looking to sell the apps and buy the wings, because those wings are just cheap.
All right, Mr. Seabass, thank you for that. Mr. Tusa, what are you watching around the block these days?
Well, it's curious to see if we can maintain the 1300 level and set this time to the downside. So definitely watching that chart somewhat closely and just tightening some things up. I think that with what Mark's pointed out today, if vol's cheap right now, it might make sense to just be a little bit more cautious with things. And if insurance is cheap, it might not be a bad idea to consider some of it.
And speaking of cheap insurance or perhaps expensive insurance, we talked on the last show about potential ways to trade LNKD, and I mentioned that you could indeed leg into a limit order that was close to the IPO level on those July 50 puts. And apparently our show has some reach because we saw hundreds of those going up over the past few sessions being sold for a variety of prices. Looks like that vol has since been crushed on that strike. So if you didn't get in soon, you didn't get in at the 85-cent level or so and didn't hit those bids pretty quickly, they're trading around 50 cents now. So that's been the vol has come off quite a bit in the July 50 puts out there in LNKD. So I hope all of our listeners who did indeed use that to leg into their limit orders are sitting pretty right now. Of course, LNKD, the only name pretty much bucking the trend today, up on the day about 7.5%. So that also helps to crush those puts a little bit. And Mr. Kurzakowski, what are you watching for the next few sessions around the block here?
I'm looking forward to Thursday's claims numbers. It really disappointing job numbers last few times around. It's interesting to note that when you take into account the seasonally adjusted average at basically McDonald's accounted for half of our gains for this past non-farm payroll number. So just seeing if we're starting to see a lot of these indicators kind of just teetering here, just above the brink. I mean, obviously we've had the some of the manager indexes, the purchasing manager index, it have come off really, really sharply. But as far as what really impacts the average everyday Joe, looking at the housing numbers and job numbers, really kind of have Thursday circled and seeing if we're going to have another jump up in claims.
Now, of course, we got crude inventories on the 8th, but you think that all that has pretty much been relegated to unimportance after the OPEC stuff we saw earlier?
Yeah, the OPEC meeting is really big, unless this time of year we start looking at gasoline inventories, and you can have huge build in crude, but if we have a drawdown or a larger than expected drawdown in RBOB, then you'll see. You could see crude rally along. The products are actually right around even. If the heating oil and RBOB are not too far off each other, so we're kind of in that transition period. Really, kind of interesting to see what the MasterCard numbers are going to be for this past week as far as the amount of money spent on driving, but I think that unless there's a really big shocker there, I think a lot of that has been priced into the price of oil at this point.
One thing I did want to mention before we go, as well as we mentioned at the top of the show about a lot of technology news with Apple. There is a lot of other technology news that we'll be keeping an eye on this week, because in addition to the Apple big press announcement today, it is also the old E3 week, the Electronic Entertainment Expo. So a lot of big announcements coming out of a lot of large tech names. Starting today, I believe, with Microsoft had their big press conference. I'm not sure. I haven't had a chance to be at my computer all day to check the latest results. Also, we'll be seeing big announcements from Sony, Nintendo, Activision, Electronic Arts, all these big names in the entertainment side of the tech space. So if you're active in any of these names at all, ATV, ERTS, this is definitely a week where you're going to have some volatility and you're going to have some movement. So might be some good trading, and we'll certainly be watching this around the block, the entertainment side of the software spectrum and the hardware spectrum, to see what's coming out of these big names like Sony and Microsoft and indeed Nintendo and a bunch of others. All right, that's going to do it for the Around the Block section. That's also going to do it for this episode of the Option Block. I want to thank all of the rogues gallery of contributors that we have on this show. Starting off with you, Uncle Mike, what do you have coming up over at Know Your Options, Inc.?
Calendars and diagonal spreads coming up this Monday night. If you're interested, this Sunday night. If you are interested in attending the weekly webinar at Know Your Options, go to our website or send me an email, miket@knowyouroptionsinc.com, and we'll make sure that you get on the list.
If you want to discuss calendars and diagonals, a good example would be that 131,000 contract trade that went up today in Ford. It might be a fun one to dissect for your webinar.
I'd be up all night.
The Jan by Dees, by August, by July, by more Jan. That's a fun one. That's a good take on your love of the stupids. But speaking of which, when's your stupid webinar coming?
I don't think options. It's probably not going to happen. So it'll still be a while. So I had to kind of put that one on the back burner. So we're working on the smarts before we get into the stupids, I guess.
All right, and Mr. Kurzakowski, what is coming up over at Options Express?
Well, as I mentioned earlier, we're having more and more accounts enabled for, or they have the opportunity to sign up for Forex trading. Even those that are just out of curiosity, it's not a bad idea. To sign up for Forex, just to see what the platform is like, see what the trading screens are like, and we just underwent a pretty thorough training session in the trading department. So if you have any questions, as always, you can give our trading guys a call, and we can be more than happy to help you out with that, especially because it is something that is relatively new to a lot of traders. And later this month, it's actually been pushed back a week. Mike Zaremski and myself are having another Espresso Live seminar or webinar on June 22nd. And I think we're going to focus mainly on the grain market, so that those of you that enjoy trading the grains, we'll go through some strategies that aren't always talked about, some seasonalities and calendar spreading and things that I think that some newer traders to the grain markets don't always have a firm grasp of.
And those espresso webinars, are those only for OX customers, or can anyone get in on those?
Anyone can get in on those. You can go to the public site. If for some reason you can't find a link for those, you can always send an email to support@optionsexpress.com, and one of our customer service reps will be more than happy to send you a link for the webinar.
Well, good to know. And of course, speaking of OX customers, if you are indeed an OX customer, let them know how much you like the show. Send us in some questions or comments or suggestions, or just send an email over to the trading desk and Rob over at the trading desk telling them how much you love the show, because we always do love your feedback, and OX likes to know about it as well since they are sponsoring the show. And indeed, if you're not an OX customer and you have heard all the interesting things that Rob and John and Tim have been talking about for the past, close to 6 months, then if that hasn't whetted your appetite to kick the tires over at OX, then surf on over to optionsexpress.com/OX radio. I believe I said just /radio last show, and it is indeed OX radio, and sign up through that page so OX knows that you are indeed coming from our show and that we get the credit for it. And also, you'll get a nice little deal. You get some free trades to come in and kick the tires and light the fires, so to speak. And, of course, good old Seabass got chased out of the Seabot atrium because he was indeed cursing too much for their liking. So I will just say for Mark Sebastian that if you're interested in checking out his services over at optionpit.com, they do indeed have their lifeboat service going on right now. And you can check that out on their website, optionpit.com, or send Mark an email, mark@optionpit.com. He'll be more than happy to answer your questions about that. And, of course, if you're interested in hearing more about the unusual activity we didn't have a chance to discuss on the show today, or any of the interesting news or breaking options developments or anything else from the world of options, surf on over to theoptionsinsider.com. Of course, we'd love for you to post your questions and comments and insight for us in the forum over there. And if they're interesting, we'll, of course, play them on the show or read them on the show. And lastly, but of course not least, we don't want you to forget that our live show is coming up on July 21st, so be sure if you're in the Chicago area to come by and have a beverage with us and maybe win some fantastic prizes like a tour of Uncle Mike's new offices. There we go. Scintillating prizes.
Definitely.
All right. That is going to do it for this episode of The Option Block. I want to thank all of you out there for downloading and streaming and subscribing to this show and making it such a success. And we'll see you on Friday right here on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.